Is the Fed factored out? Is Steve right about this?
Well, markets don't have much more Fed in there. I mean, if you look at the survey is one thing, but I mean, if you look at what markets are pricing, the markets are pricing in precious little from the Fed next year.
Is there any chance that tomorrow we're all surprised and they don't do anything?
There's always a chance, but I think it's very, very slim.
I mean, wouldn't it be interesting if they didn't go tomorrow and left it in their quiver for later? What would the markets? How would the markets respond to that?
So I've been trying to figure that out. I'm proud to say I was one of those 43 that participated in Steve's survey, and I am one of those that I'm part of that 98%, but I'm not part of the ones that think that there's a loosen that's going to happen sometime in next year, unless it's later next year. So I'm also worried about the wisdom of crowds, which is almost never right, and almost everyone's expecting this Fed rate increase to occur and the dovish language to follow that. And I would ask myself, what does the market want the Fed to do? Are we saying that if they raise rates tomorrow, they're still confident in the economy, but the dovish language would say that inflation is pretty much under control, therefore the 3 mandates that the Fed has, they've completed? Or do they want them not to do anything because they're fearful that the economy has already turned over, which would be severely negative? So just follow the script. I think that the Fed's supposed to raise rates tomorrow. I think they're supposed to have a dovish comment, and I think the markets will settle down into 2019. Markets
settle down in terms of volatility or in terms...
No, volatility is going to be here with us, but I'm just saying we're going to know more about the rate cycle, which I would think the next time that they would look at it would be March, and after that it may be the end of the year, or they may not at all. So I think it will give the markets, especially the bond market, some validation for what they've been saying all along.
But to Steve's point, if this is no longer about the Fed, what's it about? The economy?
Well, it has to be. For the bond market, it's always about inflation. For the stock market, I'm assuming it's about the economy and in some part the Fed. I don't think anyone cares.
Can I just chime in with a little data from the survey, Becky, which is that we asked people what is the major reason for the sell-off, and trade concerns is in the #1 position. Global economic weakness in the #2, and Fed rates gets into the 3rd position.
That wasn't in the tweet.
No, right.
Well, surprising.
He was not surveyed for Steve's survey.
No, I think the president and his administration know the effects here.
So the question becomes, if that's the case, if the administration is looking at this, do they try and come to some sort of a deal more quickly rather than later with this? What do you think?
Possible. I mean, it's a huge wild card how that's going to be. And I think that's one of the things that is contributing to the volatility. We don't know how that trade thing is going to work out. What you're saying is, yeah, sure, the signals the markets are sending should be saying, hey, be careful there. Let's try and get a deal done. I hope that's true.
How much do you think the China tightness is weighing on the Fed?
I think it's a big deal. If you look at the percentage that China represents of total global GDP growth, it's about 27%. They're about, in terms of what numbers you use, if you use purchasing power parity, but they're 15% of the world economy, and they represent about 1/3 of the growth. So when it comes off, that's why, Andrew, other administrations and other ways of doing things were sensitive to the idea of their policies not diminishing Chinese economic growth.
If you are a Fed governor and you're in the room and having that conversation about China, how do you calculate, handicap what the administration and President Xi are ultimately going to do? Do you even try to, and how much does that sort of factor into the thinking?
I think it's one of the things that you say, hey, we got to think about how that's going to evolve, and that's one of the reasons we're going to be very contingent
do you say,
and
okay, we got to play best case, worst case, and we're gonna go along with the worst case, or we're going to go along with the best case?
I think you got to go along with, you got to wait and see.
No. I think Powell has said what he would do in that situation. It's the metaphor that he's been using. When you walk into a room you don't know and the lights are down, you go slowly. And I think, by the way, Yellen's Fed did the same thing. You wait until these things clear in front of you before you move ahead. And so I think that's why they'll do this December rate hike. Wait to see how the Chinese situation. I know that.
Why go ahead with the December rate hike if that's the case? If you want to wait for clarity, it seems like a terrible time to be raising rates.
Well, but the economy.
I don't have a good argument for that, Becky. And normally, I will tell you this: when we go into a Fed meeting, I know what the Fed's going to do, and I feel confident in it. I don't feel confident right now.
So you think there's a chance?
I think there's a chance. I think there's a small chance. I think there's a 20%. Look,
You're saying there's a
we
chance?
can have the same conversation around this table that the Fed is having. There is no information we lack other than the output of the Fed model, which people can give us anyway.
And that's my one thing. Is
we can have the same conversation.
They may have decided they'd rather not hike rates, but because they haven't telegraphed that, would they be trapped in this and caught into a box?
They
that
might.
Surprises the market.
They might.
Think, what the heck do they
They
know?
might. They would argue you could make the case 3% growth, 3.1% growth, 3.7% unemployment. We've got more growth and lower unemployment than we forecast, so we're doing an extra quarter point more than we forecast. You can make that case.